Well, happy Friday, everybody. Friday, and news never stops. But today I want to take a step back and I'm trying to answer a question, even for myself, on why this is happening with M2 and with our federal balance sheet. So here's M2. And as you can see, it's had quite a run. And I want to point back here that, that way back there in 2008, we we're around $8 trillion. And now we're 22.19 trillion. In fact, is we hit an all-time high in July of 2025. Okay, so why is this important? Well, anybody who follows this channel knows that I believe that M2 is our liquidity and tells us it measures our liquidity, and this liquidity is what drives certain investments. I.e., I believe it drives the stock market. I believe it drives Bitcoin. Okay, crypto. I believe that these are a function of liquidity. And believe me, I have a lot of people I work with argue with me every day, especially the young people, that crypto is an alternative, doesn't act like it, that it's a store of value, certainly doesn't act like that. I think it's strictly a function of liquidity. But why don't we look at a couple charts? Now, if you're on TikTok with me, you'll notice that I posted on inflation, and it's pinned from I think the beginning of July, and but this is M2 and the S&P 500 on the left, and M2 and Bitcoin on the right. So the first thing I would say to you is it looks like the S&P and Bitcoin are basically on the same track. And when I did this, I think it's like in the first couple days of July, I said that, hey, if you tell me that you think the market and Bitcoin are going to go higher, then I would agree with you. And if you look down here, where M2 kind of bottomed out, Bitcoin was $75,000. And now it went up to like 124, somewhere around there. I don't know the exact high. It doesn't matter. The only reason is it's been trading a little ragged the last week or so. I was talking to one of my crypto bros, and I was like, look, Bitcoin's just not, I don't know what's going on. What's going on? Liquidity, we're hitting all-time highs, and yet Bitcoin is kind of taking a hit here. And this morning, I think it's down to 108, something around there. So this started raising questions in my mind. And the person I was talking to today was totally convinced, and we have kind of like, we're going to call each other up and talk about it. But he says when they cut the rates in September, then these things are going to fly. And especially the other coins, people have another name for them, but Ethereum and stuff like that, they're just crap coins. People don't call them that, but I'm not so sure. He's like, they're selling Bitcoin to get into the other coins, and I don't know. What do you think on that? That's one thing I'm asking, okay? And the big thing I'm asking, though, is there's our M2. You saw that going up. And here's our balance sheet. Our balance sheet's down, well, $2.4 trillion, which is no small amount. And yet M2 continues to rise, which I was like, I don't know. I have these charts in front of me all the time, and it just dawned on me, this doesn't seem right. But here we are. Our Fed balance sheet is down considerably, 30%, and yet M2 continues to rise to all-time highs. So, of course, I had to ask perplexity, how does the Fed balance sheet decline, but M2 goes up? And they go in here, and you can stop and read this, but basically it says that it is not the norm and depends on the interplay between central bank activities, commercial banks, and private sector money creation. Remember that, private sector money creation, all right? So where they say that normally that they rise together, M2 and the balance sheet, it's not necessarily true, because M2 consists mainly of bank deposits, currency, demand deposits, savings, small time deposits. even as the Fed removes reserves. Okay, so think of what the Fed balance sheet is. It's taking reserves out of the banking system. And the reason that they take it out of the banking system is that we now call that QT. So either we buy them back or we let them come due. Now, normally, 99% of the time, we let them come due. Now we have the Treasury, who has been consistently in the last couple of weeks buying bonds in the open market, but that's not what affects this, okay? And it says here, look, in 2018, M2 grew even though the Fed's assets contracted because private banks were extending loans, creating deposits faster than the central bank was draining reserves. So you have to think about it. The private money creation was outperforming, or whatever you want to say, going up faster than the QT was going down. So they go on to say here, look, even with the Fed shrinking its balance sheet, reduces reserves, that the cash hold at the Fed. So you got to think about what happens with QE, right? We buy the bonds, we give them the cash comes back to the Federal Reserves, and that's where they keep their cash, all right? We did a big video on this, on the Treasury one, like 2 or 3 or 4 days ago, whatever it was, okay? And so you go to the second part here, there's no strict one-to-one relationship between reserves and deposit creation. If demand for loans is strong and banks are willing to lend, increased loan creation adds to M2. This means M2 can rise even as the Fed removes reserves, or at least to a point where the reserve scarcity start to constrain lending. So look at what they're saying there, removes reserves, all right? So we did a video on SLR, the supplemental leverage ratio. This was put on to our big GSIBs, which is where all our QT and QE happens. Remember, we don't do it with every bank. We only do it with our 8 GSIB banks. That's it. So we either buy their bonds or we give them the cash, whatever it is, it's only to the GSIBs. So the GSIBs, if you remember, went to the government and said, hey, we don't like this SLR. I know you put on the great financial crisis, but we're so well run now, we don't need a supplemental leverage ratio, i.e. added reserve. And in fact, we don't need it so much that we're telling you, the Federal Reserve and the Treasury, that if you do not get rid of the SLR on money that we have to keep aside in reserve, when we participate in the Treasury auctions, we're not going to participate in the Treasury auctions, okay? Remember that. And so what happened? Well, the Treasury said, and the Fed said, guess what? You don't need reserves to buy treasuries. So our banks are buying our treasuries with no money down. You and I, if we only could be that way, okay? So they took away the SLR, which, what does that do for the banks? It gives them money back. It gives them what they had to keep at the Fed as reserves to participate in the Treasury auction. They no longer have to do. They are now participating with no money down, and all that money, all that capital was given back to the banks. And guess what? They started, the letter was written in July of 2025. The Fed and the Treasury indicated immediately that they also agreed with them and that they would remove SLR once they got all the comments back, because you have to have the comments. And so in June of 2025, they took away the SLR from our GSIBs. And guess what? When did M2 start growing again? Oh my, June of 2025. So in June of 2025, up started to shoot our M2 again because the banks all of a sudden flush with cash because now they didn't have to keep it at the Federal Reserve to participate in the auction. Look at the charts here on M2. When did they take off? June of 2025. So I think we can say that the Fed balance sheet doesn't affect M2 as much as I thought, but no reserves means more money to be lent.